Hello viewers, welcoming to you all to this educational channel Accounting Equation Academy. I am here with a topic income, which is very important chapter under Income Tax Act, because income tax is based on this topic, that is income. Calculation of accurate and correct income is a big challenges for this act. The term income is defined by section 2 subsection 24, which is being inclusive and not exhaustive. The meaning of income is defined in a broad way, having much wider concept. It includes receipt in cash or in kind. Moreover, taxable income is not only a revenue receipt but also capital receipt. Therefore, the meaning of income is given in the following way. Income is a periodical monetary return with some sort of regularity. It may be recurring in nature, it means which happens regularly. It may be broadly defined as the true increase in the amount of wealth which comes to a person during a fixed period of time. So definitely the income earned by a person making a saving out of income, and that will be converted into wealth, and here increase in the amount of wealth. However, this does not mean that income which does not arise regularly will not be treated as income for tax purposes. For example, winning from lottery, winning from card game, winning from betting, gambling, these are the casual incomes, and having no such regularity or having or without some sort of regularity, this income received by assessee or recipient or person or such type of receipt is also considered as income and chargeable to tax. Receiving of such amount is no regularity. So in the absence of regularity of receipt, and such receipt is considered as income and put to tax. Because the income tax has already said by the section 2 subsection 24, the term income is inclusive and not exhaustive. So that is the all possible receipts are taken into account as income unless they are specified exempted under the Act. The definition of the term income in section 2 subsection 24 is inclusive and not exhaustive. Therefore, the term income not only includes those things which are included in section 2 subsection 24 but also includes such thing which the term signifies according to its general and natural meaning. So as per this, many times the receipt is considered as income considering its general and natural meaning. Say for example, e-commerce operator are recently originated and which is purely based on internet. E-commerce operator earning income which is falling within the section 2 subsection 24 as such income meeting the features of income within its general and natural meaning. The e-commerce operator started earning with the e-platform, so this earning falls within the meaning of income, and considering its features, that the features signifies their receipt is also considered as income and chargeable to tax. As per this section, the income list includes numerous items. Among them, few are mentioned to understand proper way, hence not taken entire as given under the Act. So I have taken here only 10 items to understand basically about the income which is defined, and accordingly thus under section 2 subsection 24 the term income specifically includes the following. Profit and gain generated by a business is taxable as income. Dividend on shares, equity shares or preference shares is received is income. A voluntary contribution received by a trust not being within a specific direction, not for any specific purpose, general purpose, then it will be considered income in the hand of trust. So trust is created for charitable purposes, and the institution come hospital, college, educational institutions comes under trust. And similarly, perquisite benefit, so which is related to income from salary chapter, and if the perquisite benefit is received by an employee from the employer, is considered income and chargeable to tax. City compensatory or dearness allowance is treated as income. Capital gains is treated as income. Capital gains by any gains arising on the transfer of capital assets, so that will be capital gains and chargeable to tax as income. Any compensation received may be of a capital or of a revenue nature shall be taxable compensation. On the termination from the service or the modification on the terms and condition of service, is considered as an income and chargeable to tax. Whether it is winning from lottery, crossword puzzles, races including horse race, card games, gambling or betting of any form or nature is our income. Amount exceeding rupees 50,000 received by way of gift is taxable in the hand of recipient. Similarly, assistance in the form of subsidy grant is taxable as income. Through foregoing discussions, now we can conclude that the term income means periodical receipts from one's business, land, work, investment, etc. So these are the definite sources also for an SSC. So income possesses certain features or principles. Let us understand some features of income. The following features of income can help a person to understand the concept of income. Definite show. The term income connotes a periodical monetary return coming in with some sort of regularity or expected regularity from definite sources. So sources may be own business, land, work, investment, etc. From these sources a person may receive periodical return, and which is income. Next point, a different form of income. Income may be received in cash or in kind. When income is received in kind, its valuation is to be made according to the rules prescribed in the Income Tax Act. If, however, there is no prescribed rule, the valuation thereof is made on the basis of market value. So, income received in kind is also income. Any benefit received in kind is also a gift received by an employee from his employer on the birthday occasion, treated as income. On the birthday occasion, an employee receiving a wristwatch from the employer, it is a benefit received in kind and chargeable to tax. Next, income must come from outside. A person cannot earn income from himself. There can be no income from transactions between head office and branch office. So head office and branch office is treated as a single person. So a person cannot earn income from himself. When the branch office sells goods sent to it for sale, then the receipt is considered as an income. Otherwise, sending of goods from head office to branch office is not considered as revenue generated by a head office. Tainted income. Income earned legally or illegally remain income, and it will be taxed according to provision of the Act. So there is no distinction between legal income and illegal income. So both are taxable. Income may be temporary or permanent. Whether income is permanent or temporary, it is immaterial from the tax point of view. Income earns from a temporary source is also taxable, like income from joint venture business, temporary business, and it is chargeable to tax. Reimbursement of payment made on behalf of others. Any amount received as reimbursement of any payment or expense made on behalf of another person is not treated as income. However, any reimbursement of any personal expense incurred for self is an income. Say, for example, branch manager paid branch office rent from his pocket, and later on head office reimbursed such expense. It will not be considered as income in the hand of branch manager. But medical expenditures incurred by the branch manager for himself, and later on head office reimbursed such medical expense is taxable in the hand of branch manager, and it is personal expense incurred for self. Dispute regarding the title. In case a person is receiving some income but his title to such receipt is disputed, it will not free him from tax liability. The recipient of such income has to pay tax. Say, for example, Trey inherited a house property from his father and he has brother also. Now there is a dispute who will be a owner of this house property, and but the rent from house property is receiving by Mr. A. Now the who will become the real owner of the house property, that is still dispute about the house property or about the house property ownership. So in between Mr. A is receiving the rent from the house property, it will be treated as A's income and chargeable to tax, though the title is in dispute. Treatment of gift. In case of all persons subject to certain exception, the gift is treated as income and taxable. So next feature is no double taxation of income unless specifically provided in the Income Tax Act. An income cannot be put to tax twice in the hand of same person. A partnership form earning income, and a partnership form is a separate entity and liable to pay tax on its income. When the partners of a partnership firm receiving the share of profit that is not taxable in the hand of partners, it is exempted. Otherwise there will be a problem of double taxation on the same income. But it is happen sometimes, like in case of company, the dividend on the company's income, company is a separate entity, profit earned is a taxable in the hand of company, and later on when the dividend is paid out of the profit, that dividend is also taxable in the hand of shareholders fund as a receipt of as a income. So there is a double taxation. So here, unless specifically, it is specifically mentioned, unless specifically provided. So it is specifically provided that dividend income will be taxable in the hand of shareholders. Diversion of income versus application of income. Diversion of income means that a part of the income or whole of such income does not reach the assessee. It is diverted to some other person due to some legal obligation. Whereas the application of income means that after receiving the income, spending it, the amount paid by a person to his stepmother out of rent property which he has inherited under the provision of will from his father. This is a diversion of income. If there is no such provision in the will and he promises to pay some money to his stepmother, it is application of income. Income can be taxed on a receipt basis or accrual basis, that is due or outstanding. So in income, while preparing the income statement, we consider expense paid as well as payable, like outstanding, due. Similarly, income received as well as receivable. So this is a accrual basis. So if income is considered only receipt basis and expense is considered only payment basis, then it will be is receipt basis. So in a receipt basis, only income received is considered. In accrual basis, both income received as well as receivable is both are considered. In case of income from business or income from other sources, the taxability would depend upon the method of accounting adopted by the S. While in other cases, it would generally be taxed on a receipt or accrual basis, whichever happens earlier. Like salary receipt or salary due, receipt or due, whichever is becomes earlier. So salary of the month of March 31st due say 50,000, and the same amount is received on the 5th April, that is which happens earlier, due happens earlier on 31st March. So then on that basis 31st March will be considered as of salary and chargeable to tax. Well viewers, so all of you watch it, note down properly, and like, subscribe and share with friends. Thank you very much.